Okay, let's dive right into this explainer and unpack the massive buzz surrounding Binghatti's new super tall project over in Motor City. Whether you've been tracking Dubai's rapidly shifting real estate landscape for years, or you're just hunting for your next strategic asset, this development, Binghatti SkyTerraces, is absolutely making some serious waves.
But here's the thing. We need to look past all that flashy marketing hype to answer one fundamental question. Is Motor City's newest super tall actually worth your hard-earned investment? By applying a rigorous, data-driven approach to the developer's track record, the local competition, and the physical asset itself, we're going to figure out if this tower genuinely deserves a spot in your portfolio.
So here's our roadmap for today. We'll hit 1. The August 2026 offer. 2. Inside Sky Terraces. 3. The developer behind it all. 4. Motor City market comparisons. And finally, 5. The ROI and long-term potential.
Let's kick things off with Section 1, the August 2026 offer, and really deconstruct this promotional hook. Now, the absolutely crucial point here is this entry price, 1.1 million dirhams for a one-bedroom apartment. We are going to use this specific figure as our baseline anchor throughout this entire analysis. I mean, in a market where central Dubai prices are just climbing astronomically right now, an entry point hovering just over the 1 million mark for a luxury off-plan unit, that instantly grabs your attention. But as we know, price is only half the story.
The real magic, the true appeal here, is the payment structure. Just look at this highly attractive 40-60 split. You're putting 20% down on booking, another 20% spread across the construction phase, and get this, that final 60% isn't even triggered until handover. This is huge because it means the bulk of your capital is preserved. It stays liquid, working for you elsewhere, right up until the project is physically completed.
And then throw in a complete 4% Dubai land department fee waiver? The initial cash outlay suddenly becomes incredibly competitive. For early investors wanting to manage their upfront cash flow, this combo, the 40-60 split plus waived registration fees, is a highly engineered, totally deliberate move by Binghatti to secure rapid market absorption.
Moving on to Section 2, inside Binghatti SkyTerraces, where we'll examine the physical asset itself. So, mapping out the critical milestones, we saw the project launch in late 2025, and moving into late 2026, it's deep into active construction. But the absolute critical metric you need to watch is that Q4 2027 target handover. That is a fast-approaching deadline, and it strictly defines your investment horizon. That's the exact moment you need to be ready to execute on finding a tenant or paying out that final 60%.
And the tower itself? It boasts some serious physical differentiators that really set it apart from the older local stock. We're talking a 49-story, 208-meter super tall. The one-bedroom units are generously sized, averaging around 721 square feet. But check out that third point, massive 3.75-meter floor-to-ceiling heights. Literally, that is going to amplify the natural light incredibly well. Add an integrated smart home tech, enhanced soundproofing, and, yes, you're seeing that right, an actual artificial beach on the podium level. This isn't just a standard apartment block, guys. It's practically a vertical resort. Zooming out to the macro view for a second, it's super vital to grasp the sheer scale here. With 1,840 residential units, and over 1,000 of those being one-bedrooms alone, plus 26 integrated retail outlets, this is a hyper-dense, fully self-contained community. The design ensures residents aren't just sleeping here. Their entire day-to-day lifestyle is supported without ever having to leave the building.
All right, let's hit Section 3, the developer behind it, assessing Binghatti's execution track record.
Honestly, the financial health of Binghatti is just formidable right now. Their net profit for the first half of 2025 completely tripled to 1.82 billion dirhams. They're sitting on a portfolio valuation north of 100 billion dirhams and a massive cash position of nearly 10 billion dirhams. Furthermore, they just got an upgrade to a BB credit rating by Fitch. This provides immense institutional trust that they actually have the deep pockets required to finish exactly what they start.
But hey, money isn't everything when it comes to speed, right? What really sets them apart is their vertical integration. Binghatti controls their entire supply chain. They manage the architecture, the engineering, and the actual pouring of the concrete completely in-house. That means they successfully bypass all those third-party contracting delays that constantly plague other developers in the region. Because they aren't sitting around waiting on external contractors to line up their schedules, Binghatti maintains one of the absolute fastest delivery speeds in the entire market.
This execution confidence is exactly why that Q4 2027 handover date on a project of this massive scale is highly, highly credible.
Okay, Section 4. Motor City Market Comparisons. SkyTerraces versus Sobha Orbis versus Takaya. Let's see how it stacks up.
Looking at this side-by-side breakdown, you'll see Sobha Orbis actually has a lower absolute entry price at 985,000 dirhams, but follow that down to the price per square foot row. Because Binghatti's units are significantly larger, their price per square foot is way more competitive, roughly 1,525 dirhams compared to Sobha's 1,800. And then you have Takaya sitting somewhere in the middle, floating a very tempting post-handover payment plan.
So, the real deciding factor when choosing between these two titans is pinpointing your target tenant. Do you want Binghatti's generously large 721 square foot living spaces that are fully optimized for long-term expat families who just need more breathing room? Or do you lean towards Sobha's smaller layouts that focus heavily on ultra-premium, high-end interior aesthetics? It's space versus finishes.
But listen, whichever asset you lean towards, we have to talk about the elephant in the room. Every single investor must acknowledge this. Binghatti, Sobha, and Union Properties are all scheduling major project deliveries in Motor City at the exact same time, late 2027. Which brings us nicely to Section 5, ROI and long-term potential, examining yields, risks, and capital appreciation.
First off, the good news. A projected 6.78% net yield for Sky Terraces is excellent. It easily outpaces a lot of the more mature central Dubai communities where yields have frankly compressed because capital values have absolutely skyrocketed. For a cash flow investor, securing that kind of return is a highly defensive, income-focused play.
However, you cannot ignore this looming reality, a local supply shock. That Q4 2027 synchronized handover we just talked about means Binghatti is dropping over 1,000 one-bedroom units into the market right as Sobha and Takaya do the exact same thing. This temporary influx is going to lead to intense landlord competition and some real rental price compression during those first 6 to 12 months. Make no mistake, you are going to have to fight to find a tenant initially.
But if you look past that initial short-term bottleneck, the long-term capital appreciation play becomes incredibly strong. The area is heavily fortified by massive incoming transport infrastructure. We're talking the RTA's new Metro Blue Line in 2029, followed by the Gold Line in 2032. Couple that with the commercial redevelopment of the Autodrome, and you have a solid, steady pipeline of professional tenants constantly moving into this corridor.
So, how do you survive that initial Q4 2027 supply shock and maximize your long-term ROI? You need a precise strategy. Step 1, buy smart by selecting non-track-facing units. They're quieter, which is exactly what long-term families want. Step 2, when listing the property, explicitly market those rare 3.75-meter ceilings that instantly makes your unit stand out from the sea of competition. And finally, Step 3, leverage the building's smart tech. Retrofitting for Green Ejari certification allows you to legally command premium rental brackets under the current RERA parameters.
I'm going to leave you with this final, crucial question to ponder. Does the undeniable, massive long-term infrastructure growth of Motor City outweigh that short-term leasing bottleneck you are practically guaranteed to face in late 2027? Think about your timeline, your capital, and your own personal risk tolerance. Thank you so much for joining me on this deep dive.